Joining me now is News Corp's personal finance editor, Sophie Elsworth, who has been working frantically to bring us the latest on what households can do to relieve some of the financial stresses we find ourselves in. Hi, Sophie. Let's start with those who've lost their job or have reduced hours. What do they need to tell their financial institutions?
Well, Rita, we've seen already tens of thousands of Australians ringing up their banks asking for help. So the first things anyone out there who's struggling should do is phone up their bank, ask for assistance, see what packages are available. Since the home loan package relief system was rolled out last week, tens of thousands of homeowners have already sought assistance here, and some banks are also offering relief across other products such as credit cards and personal loans. So it's important you get onto it as soon as possible.
Well, yeah, there has been a lot of focus on home loans and business loans, understandably, but you mentioned credit cards, personal loans. What can people who've got those sort of facilities do to get some relief? Are all the banks coming on board and providing some relief to credit card customers and people who've got personal loans?
Well, look, I was just talking to the big banks on this today, Rita, and they haven't come out specifically about credit cards yet, but they are saying if you need assistance, we will be there to help you. Now, ING came out a couple of days ago and said, yes, we will offer assistance for credit card and personal loan customers. Now, this means you'll get deferral on your payments, but during that time, you won't be able to use these products. So it'll operate in a honeymoon period of about 6 months, like the banks are doing with loans. But just be careful, there's strict guidelines around this. So if you ring up your bank and you cannot use that credit card, that's going to be another, line of money that you effectively can no longer use.
That's it. And when your income sources have dried up, every line of money is crucial. Talking about taking practical steps, how do people, because the banks are inundated with people calling them up, the phone lines are horrendous. Are all the branches still open? Can people walk in there and actually see somebody, or are they taking measures to limit numbers in branches as well?
Well, Rita, the branches are still operating in many cases. CBA had to close, I think it was about 10 the other day. They had staff resourcing issues with people, unable to be there because of obviously everyone has to be at home at the moment. So look, the banks are not encouraging you to go into branches at the moment. But look, they are open for business. They are there to help you. If you are going to default, it's important that you call them. But Rita, don't forget, a lot of us are at banks. I myself, I have a bank that's all online, so I have to rely on call centres. It's incredibly stressful for people at the moment under financial hardship, and if they can't get through to their bank, they should be applying for assistance online.
Well, that's a question about getting access to your bank. If you are having trouble making contact, if you don't want to go into a branch, which is completely understandable in the current environment, we've been told not to leave the house unnecessarily. Will the banks backdate these requests? So if you've had trouble contacting your bank, has there been any indication that they will backdate the freezing of these loans and credit card facilities?
100%, exactly right, Rita, they will. I spoke to Commonwealth Bank this morning. Now, they said for people who cannot get through to their call centres, which have been inundated, obviously given they're the biggest bank in the country, put your application in online and they will backdate it. As soon as they get to it, they will backdate it to when you need that deferral. ANZ came out last week and said, you just have to ask for a deferral. We will not ask for any paperwork. We will not grill you, is what the ANZ CEO Shane Elliott said. Look, banks really want us to be able to pay, and if we can't, they want to implement a strategy so that at the end of this, we are able to continue paying the loans that we've taken out.
Now, from April 20, people are going to be able to access their own superannuation savings. Can you explain to us how they do that and how much are they able to withdraw at each time?
Well, this is huge. This announcement by Josh Frydenberg on the weekend just gained so much attention, people being able to tap into that retirement kitty that they've tucked away. So what it means is it's not means tested, but you will have to show you are in hardship. So it doesn't matter how much money you have in super or how much you were earning. If you need that money, you can access it through mygov.au. So it's my.gov.au. Now, Rita, really importantly, you can access $10,000 from about April 20 once it's open this financial year, tax-free, and then another $10,000 in the next financial year from July 1. But remember, this is a last resort. This can end up costing you $100,000 by the time you get to retirement, given what the returns are on super long term. So be really careful when you do this.
Well, yeah, but people have got no income. They've got little option but to access those savings that are supposed to be set aside for retirement. And given where the share market is, it's probably the absolute worst time to be taking out money out of your super. But what other option do people have? So if they want to access the full 20,000, it's important they take out the first 10,000 before June 30, and then they're allowed to take another 10,000 in the next financial year after July 1. So it'll be interesting to see how many people take advantage of that. Unfortunately, I think it's going to be a lot of people. What about interest rates? And there's a lot of people who are paying way more than they should be, particularly on their home loans. Are the banks coming to the party and saying, okay, we will match the best rate on the market and give you a lower rate? So long term, there's some savings there.
Absolutely. If your rate is above about 3% at the moment, you should be on the phone to your bank if you're a variable rate customer and get them to move, Rita. You have the power as the consumer at the moment. They have got so many customers that cannot even meet repayments. So it's really important for every customer out there paying a home loan that you are paying it with a 2 in front. Now, some of the banks have dropped their interest rates on fixed loans down to as low as 2.09%, which is just remarkable. But remember, with fixed loans, once you are fixed into that period, you are locked in and you will not be able to access that money, which is very different to a variable rate loan. But definitely ring up your bank, talk to them and see what they can do, because you have to try and keep those costs down now. And if you're paying a rate above 3%, you're just throwing money down the drain.
Now, we talked about accessing your super savings. I would imagine at a time like this, there's a lot of people who are accessing the equity they've got in their homes. If they've got lines of credit against their house, or if they've paid back more than their loan calls for, they're redrawing that amount. Have the banks indicated to you if that's already happening? Are they anticipating it happening in the coming months?
Look, they haven't gone into that at the moment, because at the moment it's all focused on mortgage deferrals. But absolutely, there is no doubt there will be people out there tapping into their redraw accounts, their lines of credit and their offset accounts, because obviously we're in an emergency situation. There's some borrowers out there who will not have any income stream whatsoever. The good news though is, Rita, that on average home loan customers are 2.5 years ahead of their repayments, which in times of crisis like now is very important. If they have those funds to tap into, it is a bit of a saving grace and something that many Australians will undoubtedly turn to in the coming months.
Oh, absolutely. If you are 2.5 years or more ahead on your home loan, I think it gives you just a little bit of peace of mind at a time like this, that at least one thing is taken care of and there is a little surplus of funds to use if need be. Now, just lastly, the private health funds, they were due to increase their premiums at the end of this month. Has there been any update on if that's going to go through?
Well, yes, we had a story today that was in News Corp papers showing that some of the funds are reviewing this and some have actually said we are not increasing on April 1, which we were going to do. Now, the first one that came out was Perth-based fund HBF. They have over 1 million members. Most of them are in Western Australia. They are the first one out of the gates that were due to increase funds by 1.98% on April 1. The CEO yesterday told me the message to their members was get that renewal, that premium increase renewal, and throw it in the bin. We will not be implementing that now. They're working around the clock to stop this. Now, I just got word on the way here into the studio that another smaller fund is coming out and looking at doing this, likely to be announced this afternoon. But the big guys, Medibank and Bupa, are not doing this. And this is going to hurt a lot of people, Rita. Some of these premiums are going up 3-4%.
Oh, and the premiums are through the roof already. It's putting such a strain on so many people. And at a time where you need your medical insurance more than any other time, you just don't want people to drop out. And I think a lot of people are going to drop out.